Hello, everybody. Hey, traders. Happy trading battle. It is Event Card 65. I'm your host, Chris Pulver. Thanks for being with us today. We have a very special battle tonight. We have Austin Silver. We have Nick Syiek. Let's introduce our two pugilists for tonight. In the blue corner, Austin Silver coming to you with a 1-1 record, hailing from St. Petersburg, Florida. Austin trades indices and Bitcoin. He is the owner of ASFX, helping new and struggling traders. Big on trading psychology, trading mindset, and technical analysis. Also, sharing trades all the time to all of you out there. And Austin, welcome to the trading battle, sir. Nice to have you.
Thank you, Chris. Yeah, it's good to meet you. It's good to be here again. I'm really looking forward to it.
It's going to be a great battle. And in the red corner, we have Nick Syiek, also coming in with a 1-1 record. So this will be the tiebreaker. Nick coming from Atlanta, Georgia, active currency and commodity trader, social media influencer, founder of A1 Trading, and back again. I hosted just a couple weeks ago. Nick, back in action, ready to get your revenge. So again, 1-1 is going to be really exciting. Nice to have you. How you doing, Nick?
Happy to be here again. Hey, does being in the red corner mean I'm the bad guy? Because I don't know. I could play the villain today. I'm a little pissed off last time. I lost to Jerome from ASFX. He made me look bad. So I'm the bad guy tonight.
All right, so we're looking. Nick's going to try to take ASFX down, and Austin's going to try to defend the turf. All right, so gentlemen, let's jump right into it. So challenge one. So challenge one, challenge two. Interesting little mix because essentially it's a role reversal. So challenge one. Here's how it's going to start off. Austin, you're first going to decide Nick's asset. So what would you like Nick to be trading tonight?
So I know Nick is a Forex guy, so I want to play into that and, give him something there. I don't want to throw him to Dogecoin. So I was thinking USD JPY, Nick, would be a good thing to play into because I know that the yen is something that is a hot topic nowadays. So I figured your take right now would be really interesting for me and I'm sure the listeners, because some people are saying it's at the top and we should be selling it, and some people are saying no, it's going higher. So I figured USD JPY would be a good one.
Okay, I love that. All right. Cool. I'll be nice back because that's a good. So how are we doing this, Chris?
Let's do this. Let's finish challenge one. So Austin decides that we're going to do dollar yen for Nick, and then Nick, now you're first going to decide Austin's position size, and then we'll switch it up and we'll just swap back and forth with asset and trade size. So Nick, now you can give Austin his trade size.
Okay. So if it's okay, I think what I'm going to just slightly tweak is I'll say I think we should do 5% risk for Austin. So Austin has to do 5% risk on whatever he trades, just because I haven't given him his asset just yet. So, 5%, the lot size, I'm not going to be evil and say like US 30, 10 lots, because that would be, kind of the end of us all. The market would do crazy movements off that. Okay. I'll say 5% risk, whatever I end up choosing for him.
Okay. So let's go ahead and jump right into battle two. Let's roll reverse. So Nick, now you decide Austin's asset. What would you like him to be trading today?
Okay. So you gave me dollar yen, and dollar yen is one that I like. Dollar yen. So I appreciate the niceness. I'll be nice back. I want to see you trade one of the indices. I don't care which one, SPX 500, US 30, whatever you're trading, whatever you're interested in. I'd just love to see some indices trades. That'd be cool.
I'm down for that 100%. We'll do S&P 500.
All right. Sounds good. And then Austin, let's see here. We're going to do position size. Are we going to match here, gentlemen? Is this going to be a friendly 5% risk?
Absolutely. Okay. I think that makes the most sense.
So that way it's fair. All right. So we're not trying to blow up somebody's account with trade one.
No, definitely not.
All right. Sounds good. So let's do this, fellas. Let's get into, let's talk charts. Nick, I'd like you to take the screen if you want to. I'd like you to run through, for the traders' viewers out there, run through the dollar yen and show us what you're thinking for your first trade.
Yeah, sure. No problem. Let me see what I can get myself into with dollar yen. So the yen itself has been like really weak overall in the last few weeks. Some highlight things from my notes on the yen recently. Yen sinks to 20-year lows, while the Bank of Japan says they're not going to loosen their hawkish stance towards interest rates. They also left the key short-term interest rate the same, which doesn't seem very productive, considering the Japanese interest rate hasn't changed in a long time. However, in this sort of situation recently, in a period where we've seen like super high inflation for lots of other places, Japan kind of remains that safe haven for a reason. If we take a look at some of their metrics, looking at Japan, and we take a look at, for example, unemployment. Look at Japan's unemployment, 2.5%. Looking at their interest rate, negative 0.1%. Their inflation. When we're talking about super high inflation, like here in the US, when we see things, like 8.3%, Japan is at 2.5. This is sort of the argument for why Japan is usually considered a safe haven asset. It's because their economy is like way less volatile. It doesn't like swing so massively, like, for example, the Euro region and the US, et cetera, the UK. So when looking at the yen, do I want to be a buyer of it? Well, no. I don't want to buy the yen because it's been trending so far to the downside this year. And when I say downside, of course, we're talking about other assets like the dollar, the pound, the euro have been trending very well against the yen. And jumping in front of that is, to me, a really tough game to play. In fact, two times back on the trading battle, when I was speaking with Gary, we were talking about the yen. He asked me if I wanted to short the yen then, and I said absolutely no. And I'm glad that I didn't, because it would have been a little bit tough. The dollar yen has had such an incredible year following the 10-year, following just dollar strength off of a hawkish Fed. So if I had to do anything, it's going to be buying. It's not going to be shorting. In terms of placing a position, it's a bit tough to do so with markets like this, because you're sitting at like the previous top of a massive move like this. If I was trading, on my own, I'd be looking for pullbacks to deeper retracements and, looking for areas of value, just simple support and resistance stuff. But usually what I try to do with my trading, I start fundamental, I start, bigger picture, longer term trends, and trying to find pullbacks in lower time frames using technicals for entries and exits. So dollar yen, I am long biased. I would like to buy it at a lower price, but for today's battle, timing is a little bit off the table. So I'm going to look to buy dollar yen. If I have to place a trade risking 5%, I would be willing to do that. So, and shout out to 8cap, which is sponsoring today. They're actually on TradingView, which is awesome. I trade on TradingView all the time. It is the best place. Like, no more MT4 for me. It's too easy on TradingView. So I guess I'll have to place a trade here. Let me see if I can. So I'll go here, and we said 5%, right, Austin?
That's what he said. I'm already in mine too, as you've been talking. So I'm already in the game here at the 5%.
Dang, you're fast. You're fast.
So, I mean, look, I know you're a man of your word, Nick. I knew you were going to do it too. Don't leave me hanging now. Don't do no 0.5% or something like that.
I got you.
I got my eyes on you, bro.
Okay, so we're risking 5%. Like, punch in the 5%. It's going to be $500 on the 10K account that we've got here. So I'm risking. I'm going to be fairly aggressive here. I'll put stops at least below under here. Yeah, so that's going to be a
Chris,
stop
are we
loss
looking to hold this trade for 5 days? Is this the 5-day trade?
So we can do either one. We can, like tonight, if let's say that dollar yen pops to the upside and Nick wants to close, he's more than welcome to do that for his charity. That's acpatusa.org. Same thing for you. Austin, if you're liking the trade tonight, you can close out, get back in, and have like a trading battle session trade and also a 5-day trade. So we can do whatever works for you guys. Yep.
Got it. Okay, cool.
And also, we're excited to see the scoreboard here in a little bit once these trades are placed. So once we have live trades running, we'll have a tally.
Sure. And it's funny,
So,
Nick, I
Nick's
feel
hard
like
work.
your idea to be long biased is very similar to what my play is going to be to the downside on the indices, because I feel like what we're seeing is that but basically both of us are saying continued trend. You know what I'm saying? Not calling a top, calling a reversal on USD JPY for you. And I'm not calling a bottom is in on the indices right now. I think that more likely than not, based on even some of the stuff we were talking about before the live stream, Chris will probably agree with me. More likely than not, I think we're headed lower for stocks in the bigger picture, 6-12 month picture. So I think like that fundamental bias has been driving a lot of my even short-term day trading decisions. So when we come into a challenge like this and we're looking for setups, it's really interesting because last challenge when I was on with Ray Vaughn, we were coming into the end of the week. I think I was on a Thursday into a Friday, and that Friday the market sold off like crazy because of a down day on Thursday. Now, look, you kind of set me up here for hopefully a nice one, Nick, with us selling off today at the end of the day, Thursday. Right. I think we might see more movement to the downside. So I can actually kind of go into my analysis if you want from here, Chris.
Yeah, absolutely. Take it away. Nick, you good on yours with dollar yen? We'll pass it around.
Yes, pretty close.
Okay.
I'm just setting it up here. Don't worry about it.
So I've been, like I said, really interested in indices. I was explaining to you, Chris, I've really been focused on them since 2021 is really when I got my foot in the door with them. specifically US 500, NASDAQ, and US 30. Those three were the ones that I was really most interested in. A lot of my trading is technical analysis first, but with the bigger fundamental picture that we're living through with the war in Ukraine, with China and the COVID lockdown that they're kind of doing, which is, interrupting the supply chain, with all these things that we're dealing with, monkeypox, bro, we got monkeypox on the loose, like all these things. I feel like it's a great time to be willing to be bearish overall and let shorts play out, where we're having big days to the downside that are wiping people out that are trying to hold longs, and I'm able to come in and look for shorts on the downside. So the two EMAs that I'm looking at right here in yellow and in red are an 8 in yellow and a 21 EMA in red. I also have a 50 EMA in blue. Where we're at right now with the 8 just crossing under the 21 with today's closing price action, I guess you would call it yesterday right now, that's a really strong bearish signal for me. Also, what makes that a strong bearish signal for me, I use what is called a TDI, Traders Dynamic Index. The guys that follow me know what this is. So it's an RSI just with a moving average applied to the value, the closed value of the volume. So you're basically getting a trend for volume. It's a sentiment indicator. And with sentiment now under the 50 value since January 27th, couldn't break above the 50 value here at the end of April. Where we're sitting right now at 42, this is a very bearish position. So for me, I think we're more likely than not going to see this move from where it's at right now at about 4,020, see that move down towards the 3,800 level, more likely than not, because down here, we also have the 800 EMA. This is, of course, the previous level we slowed down at. So I think more likely you're going to see it move back to this price rather than retrace and break up through the 50 EMA. If we're reading and reacting to what current price is saying. If we were forecasting, maybe you've got buys in here and you've got to stop at the low and you're looking for the bounce. But that's just not the way that I trade. With the 8 crossing under the 21, price holding the 50, clear lower highs, and I really, really love breaks and retests of horizontal structure. And I think I talked about that with Ray Vaughn, just that's been a huge thing for me. I don't really draw diagonal trend lines anymore because very often they lead to fake outs. But when you see clear horizontal levels that are set like it was here and here, it's held here, it's held but then broken on these types of retests here and here, that's the type of move that I'm looking for. So what I do in my own trading, I have entry signals, just a few of them that I look for in these types of moves. So coming off of a structure level like this, I'll look for what I would call a D1 entry, or this, which is an A1 entry. So from here, the structure on price action feeds the bearish bias. The technicals on the indicators feed the bearish bias, and then the fundamentals also feed the bearish bias. So that's why I'm short, and I'm looking for a move back down, like I said, within the next 5 days, hopefully towards the 3,800, 3,850 level. If by tomorrow we don't see a lot of acceleration, I might close the trade if hopefully we're up in profit and not hold it over the weekend. But if we have a strong down day tomorrow to end the week, I would anticipate more movement to the downside next week. So that's my thoughts on US 500, S&P 500.
Very interesting. On the bigger picture there, Austin, if you go to, let's say, a weekly or monthly chart, do you have any more additional insight to where you see, so, the bottom there, that recent bottom was right around that 20.5, 20.6 level. It was a wick below. Do you see like fresh lows, another 3, 5, 10% lower? Like how bearish are you in your forecasting for the indices?
It's a good question, and I appreciate you asking. I think where I find success in my own trading is reacting, not predicting. So could this come lower? Absolutely. Where? Well, I could look to the left and I could point out 4 different levels that it could come to. You could look to the left and find another 4 levels it could come to. So there's a million different levels it could come to. But I think the way that I would rephrase that question in my mind, if we're trying to like talk about making money, what is it telling me right now? Right now, lower highs, lower lows, 8 crossed under the 21, and we're under the 50 EMA after breaking and retesting. So we have strong resistance above, especially in here, like I said, that 44,200 zone, 4,100 zone. So as long as we're under that, I think we move lower. If we take out this low at 3,800, who knows how low we go? Because then at that point, you're going to have people really feeling that this is going to pick up some momentum, I think. And then from there, like I said, it's really up to how quickly I think all the economic pieces start moving. What does the Fed do
Yeah.
if we start seeing accelerated movement? What do the hedge funds do? What are institutions going to do? So I think there's all those other pieces that then start kicking into their different plan Bs and things like that. And that can create a different reaction. So, but overall, I would not be surprised if we were back at 2020 lows in a year from now. I'm worried in a way, and I'm hoping I'm wrong, but like from an investor point of view, I'm worried that we're headed for that type of stock market that is not 2020, 2021. That is what Japan did for the last 10 years, where it kind of moves sideways. You have some pops, but it isn't this strong. I mean, look, if you look at our stock market compared to every other country, no other country does it look like this. You know what I'm saying? So I'm worried that we're headed for something different than what we've had previous. But that's cynical, and you don't make money like that, you know?
Sure. I mean, look, you want to talk about how many people in the last 10 years have been calling for the biggest bear market ever, the doomsday post 2008, and of course, they're like the canary in the coal mine for 5 years, and they're still wrong, and they're still wrong, and they're still wrong. I've got friends and family that swore that they should just short everything, go to cash in 2020. And if you had the courage to buy anything in 2020, it was a great year. 2021 was a great year.
Right.
So what I want to bring up for both you guys to chime in on is, talk about. So, Austin, you're bearish on the S&P. Nick, you're bullish right now for your position on dollar yen. So I want to throw a little curveball in there because we talked about China, COVID lockdowns, China reopening. I happen to be in some long calls this week on KWeb, on CQQQ, and Alibaba. Got some decent entries on there. I missed some great limit buys at those recent lows we had back in March. And if you think about the narrative last year, China completely flipped from anti-tech, crushing its own technology firm, shutting down Jack Ma and fintech Ant, to all of a sudden now turning the corner, Ukraine invasion, Russia-Ukraine invasion, and now China's coming out with 33 different fiscal measures, supply chain management, food, energy, and financial support, real estate support. So they are right now like the one accommodative country, second largest economy in the world, against the backdrop of the entire world that's freaking out about inflation and trying to tighten and contract. And I just think it's interesting, like, is China going to be able to sustain growth and have things that are good in the country while coming out of lockdowns? And do you see any crazy, outlier ramifications for the U.S. markets? Do you see any outlier ramifications for commodities? So I'm throwing it out there, and it was kind of a wide net with commodities and, the Shanghai, the Hang Seng, anything like that. But I'm just curious if you guys want to tie some correlations together. I'd like your thoughts on that.
Go ahead, Nick.
Yeah. Sure. So China is not something that I've paid a tremendous amount of attention to. I kind of lost a lot of interest with China, probably along with most of the stock market, in the sense that, like, once they started talking about like shaky, might be delisted on the US exchanges, I still owned Alibaba. I've been holding on to that and been in pain for a very long time. So I'm used to the pain from holding Chinese stocks. But, in terms of China, in terms of, sort of just globally, I don't have necessarily like enough will to short global equities, but depending on whichever, I wouldn't short the Nikkei, I would short the S&P. Personally, I just don't like to short things that generate money. Sure. That's just my, like, it's not that in the short term you could probably do fine. Just longer term, I just have a hard time like holding it. Right. Maybe there's some short-term opportunities. Maybe there's some opportunities to sort of take advantage of some momentum. I actually like your trade, Austin. I thought that was kind of smart, because like you're looking at, like, if I give you my take on the S&P 500, I would have loved to have seen this level hold, right? We probably all have the same level in mind. This spot would have been nice to see this level hold, right? But it didn't. And that break right there, it tells like everybody who's looking at stocks, everybody who is sort of like hopeful today saw this and they were like, well, shoot, here's a list of my stocks. And you can see, shoot, did I get logged out of my thing? I got to relog in. You see my stocks, they look terrible today. And so everybody at home who is looking at their stocks is struggling with that. They're sitting there, they're watching their money bleed out. So for me, looking at stocks, short term, I don't think is pretty, but longer term, I think you start getting some values. And even in a situation in which we have a longer period of time of downturn, I would personally still be very willing to buy strong companies that make money already. I don't like buying companies that don't make anything, but I'd be very happy to hold those companies, build positions, because we're all in a good situation in the sense that we're younger, and probably a lot of the audience is younger as well. If you sit back and you just look at it from a very longer term perspective, and you don't, if you're investing, right, it's a little bit different. It's just a trading battle, but longer term, I'm happy to pick up shares on things like Amazon, Apple, diversify between, I think I've got like 27 stocks that I hold right now. So, longer term, I'm happy to build into it. Shorter term, it might look terrible, but because we have, all of us have sort of like excess income from other things, that's kind of nice, because then you're able to just sort of like take a portion and put it in, similar to somebody with a 401k would. So that's that. In terms of commodity markets, I'm definitely bullish. Let me see. Do you guys, hopefully behind the scenes, you guys still have my screen? Let me see if I can get it back. If we can pull it up, I can show you a little bit of commodities action. There we go. Cool. So in terms of commodities, the first one, like oil, I have to be bullish from several metrics. I mean, the Russia-Ukraine situation, fundamentally and technically, oil to me is what I like to call innocent till proven guilty. Like the idea here is we have a strong upward trend. It looks like we're probably due to retest some of the highs here. If that comes into play, will we break out of it? That'll be the next question. But until there's reason to short this, there is, for me, a bullish bias on oil, a bullish bias on CAD pairs. And with that, perhaps some sympathy moves with the gold market as well. So that's kind of globally where I'm looking in terms of commodities and equities in general.
And how much pain do you think that could cause if oil? So if you look at the chart, you zoom out to a monthly time frame, you'll see that most of the data goes back and shows a 147 high. I looked at inflation adjusted oil and saw that back in the 80s, it was adjusted for about $180 a barrel at the time. Mm-hmm. And that was as high as it's ever been. I know that there's rumors out there that oil is going to 150, going to 200 plus. I think we could be heading towards an energy crisis. This is stuff I talk about in my trading room. We talked about this before the session tonight. But, 130 is going to be super interesting because that was kind of the peak high in March and everything kind of calmed down from there. I could see a retest of 130. A lot of times oil for the summer is supply and demand. But the wild card, in my opinion, again, I'm going to go back to China just because with their reopening, that increase in demand, I think that's what potentially pushes oil through 130. And then there's really not much stopping it. And 130 to 147 is not that hard. And 147 and above is parabolic. So that to me is like the scariest trade. But I'm also very long energy, very long oil and gas for that exact reason. And I was talking about this with you guys before. There's a lot of portfolio managers out there that I'm watching and listening to and talking to that are allocating 3, 4, 5%, 10% of their portfolio, and they are long oil, energy, gas, commodities for this exact reason. Yeah. So and I think it could be crazy.
One thing to point out with oil, the China reopening, that's definitely huge. And sometimes people will say, well, what does that do to inflation? All this. The problem is monetary policy is in response to oil. It can't stop the rising demand for oil, right? If you have supply cuts through the Russia-Ukraine situation and reopenings and all that sort of stuff, if there's a super high demand and a super low supply, monetary policy is just a response to try and hold ship. And I'm not saying that from opinion. That's what happened in the 80s. In the 80s, we had massive inflation. We had oil crises and, problems arose from that, and inflation went through the roof, and monetary policy was just trying to hold it together until demand, cooled a little bit. There was no monetary policy will fix everything in terms of interest rate going up. That'll fix inflation. I mean, it might act to combat it, but until, the oil market, we all need gas in our cars. And as long as everyone is, especially with reopenings, headed out to go get gas in their car and they're pushing prices and there's more demand, that hurts the consumer. And it ultimately ends with potential layoffs, unemployment, economic hardship. It's like a full cycle. It's like the whole economics 101. It's like, and we're kind of watching it unfold. It's been definitely a very different environment to Austin's point about the difference of, 2020 rallies, 2021 rallies, lots of stimulus, lots of, the Fed in their buy-in, inflation not yet peaked its head. And now we have a different situation. The Fed's no longer on the equity traders' side. They're not in there buying just to prop up the stock market. They're kind of now they're like, oh, well, sorry, stock market, inflation's more important.
Yeah. You guys have had a great decade. So hope you protected your profits, because now it's the opposite. So now it's we'll see how bad it gets. And again, I mean, Austin, I like your opinion. So just give me a general thought. I don't think Jerome Powell's listening. But what do you think of like central banks in the last 8 to 10 years? Has it been good for the market? Is it artificially engineered? Just an opinion.
That it hasn't been good for the market. That is the big question. I just finished a couple of months ago Ray Dalio's new book, where he talks about the cycles that previous world reserve currencies and their economies have gone through. And it's the same thing happening in just a different color over and over again. So this modern monetary theory that we've been living through, where we just print money, we've created in industries that seem indestructible, like the military industrial complex. So is it good? Well, I don't know. That's a very tough question. It got America to the point that it got it to. So it's tough to say it's bad, but is it good for like where we're at now and what we have coming forward, where we might be reaping the repercussions of all that good? You know what I'm saying?
Right.
It's just the classic, what goes up must come down. Nothing goes up forever. No economy goes straight up forever. But the thing about it is this, and this is what I'm hopeful for. I try not to be too cynical, right? Like I try to be a little bit more optimistic, 51% optimistic. And I wonder, is this
Glass
something
is barely half full.
exactly where is this something where, yeah, the Dutch and the British did not last more than 150 years as the world reserve currency and someone knocked them off and we had a big war and blah, blah, blah. Are we headed for that right now with Russia and everything in China and Taiwan and Ukraine? And are we headed or is this something different? Like, is this actually something different? And I think that's a really tough question to answer. But China is something that like I've been really learning a lot about, just trying to understand their psychology and what they set out to do. Because if you ever like, I mean, all of us know Asian people, but they're very competitive, very hardworking. And like, yeah, I'm stereotyping, but it's true. And it's a good thing. And I think that those characteristics, it's almost going to make it so that they can exploit what's going on in other places like here in America, where we are actually dealing with the opposite. You know what I mean? More weakness, more softness. And I think that those internal characteristics are what are going to define us in the next 5 or 10 years, more than what the Fed does or anything else like that. I think if we crumble, it will be because of our own demise and our own social, mistakes, not the Fed. That's just my opinion.
No, that's super interesting. Nick, care to chime in on top of that?
Yeah, I love that documentary by Ray Dalio and his team. I thought that documentary was so interesting. I'm a history nerd, so I will always like watch stuff like that. Yeah, I love that stuff. The thing is, timing the Roman Empire, if we want to get really historical, 1,000 years, right? And then the Byzantine Empire, long periods of time. So for me, it's not really as easy as China has been around for a long time, and they've whipsawed up and down. They are a powerhouse. They are kind of on the rise. I mean, don't look at their stock market right now, but they've really excelled in a lot of ways. China, but remember that at one point we thought it was going to be the Japanese, and it didn't happen. So we got to be careful in the fact that you can buy into the story and say like, oh, the U.S. But I like to look at just sort of like what we're looking at. The U.S. still dominates, and I know I'm looking in the rearview mirror to a degree, but we still have powerhouse companies. Do we have sort of like, you could get into there's division in the people, like in the documentary and stuff like that, and all of that. I think that's definitely worth mentioning, but I still believe that the U.S. is such a powerhouse and has a definite place in the future. In terms of where would I invest, I still would personally invest in U.S. stocks before I buy Chinese shares or other places, even though you might be getting some great value on them right now.
I would almost be more interested in learning about how to get involved in some of these emerging markets in Africa rather than China. You know what I mean? Just for the sheer upside potential in something like that, where you're still getting China involvement because China is funding all of the infrastructure and all the projects that are going on.
They start
all this stuff
there,
So it's kind of like you're going a second layer deeper and something like that. And I think you made a great point too, just that the internal stuff is important, but America is still America. And that's kind of what I was saying about like, is this something different where like maybe in the future we don't have this world war that changes everything. The old white dudes get into a room and sit down and write the rules again. Maybe we don't have that. Maybe this is different where we move. I could see us moving into a direction, and I'm curious to know what you guys think about this, of 3 world reserve currencies. You have countries that do business with the dollar, countries that do business with China and their digital dollar, and then maybe Bitcoin as the third, if it becomes that potentially. But I could see that where you have like the 2 worlds operating on one planet, where certain countries just continue to do business in US dollars and digital US Fed dollars, whatever they're called. And then the other countries like Russia and Iran and countries in Africa, they're using the yuan. Curious to know what you guys think about that.
Yeah, I'll just chime in just to respond to that. What's interesting is prior to World War II, that was sort of the scenario. After World War II, the U.S. became the sole world power, right? As you guys probably know, if you're a history nerd like me, that became not only reflective of, it was basically fact because all the banks started using just dollars. Before that, it was the pound. The pound was the reign supreme, right? So you've got that, now banks hold the U.S. dollar. I think that it's fair to say that very well could happen. For me as like a trader, like taking it back to like just like how I approach, I just take I know nothing. I just say like, I don't know. Like that's sort of like my go back to phrase. Like, I'm not so sure. I have my opinions. I have my speculations. But when it actually comes to time to place money on it, I'm just going with the flow. One of my oldest, favorite ways to invest when it comes to stocks and just anything is betting on winners, right? I tend to bet on the winner. If China becomes the winner, guess where I'm betting, right? I'm going to switch ships. It's just what it is as a purely logical trader. So, to sort of bring it back to what we're looking at here, like my dollar yen position right now, I'm willing to buy dollar yen because dollar yen right now is a winner. And sometimes I get some criticism because I'm a trend follower. So I am following, I'm going with the flow. I'm not sure what happened to my feed here. Let me see if I can switch assets, if that changes it. But going with the flow, sometimes what that means is that, you're the last one to buy. But if you put a stop on your trade, it's going to be fine, right? Because if you're the last one to buy, sure, you might get stopped out. But prior to that, you might have been, an early rider on something, thinking like, oh, this is too high, don't buy here. You buy it and it just runs for another 400 pips, whatever, right? So when it comes to investing, when it comes to trading, I like to trade with momentum. I like to know when momentum is gone and get out of there. That's just how, bringing it back to the charts, how I would generally approach that.
Yeah. Very interesting stuff, fellas. Look, I know we spent a lot of time talking macro picture. I think it's interesting. Austin makes a great point. Just future wise, I think that there are parallel roads that the world's going to have to navigate. I think that, whether we like it or not, we've had a lot of nationalism rising over the world. I think at some point we're going to have to, break down the barriers and make the global economy more frictionless, because I think what COVID exploited was the friction in the global economy. Like, look at how fragile everything is. Look at how disjointed and discombobulated everything is. So I would like to think that from this becomes, some uniformity, some teamwork, some cohesion. But again, that's for, I guess, people above our pay grade to figure out. And all we are is we're traders at the end of the day, trying to make some decisions. And as Nick said, an opportunist, right? Bet on the winners, ride the momentum. Both you guys, great technical setups, good discussions. So let's wrap it up here. Final chance, final countdown. Are there any other trades you would like to place for today's battle? You can do it for just a short term. Do you want to, we can, let's say, Nick, favorite asset. What do you want to trade? You want to place another trade? Austin, do you like an asset? Do you want to trade, place another trade? And this is going to go out for, the next 1 to 5 days. If you guys are tracking, you can let the team know. And at any time, pull profits if you want. But what do you like for the next 5 days? Again, granted, this is a Thursday. We're going into tomorrow and a week. So you'd be holding this over the weekend, perhaps. So anything you guys like.
Yeah, sure. Austin, you want to go first?
Sure, real quick. I actually just put another position on, so I'm short Bitcoin, my favorite.
Okay.
So I will be willing to hold this through the weekend. I'm not sure whether 8cap is a broker that's open or not during the weekend, but as long as tomorrow isn't a huge bullish day, I'll hold this trade for us over the weekend. I'll figure out if they close or not over the weekend, and then probably try to get out of this Monday or Tuesday. Now, if I can be actively watching it and closing it over the weekend because 8-cap is open, if it moves up a lot Saturday or Sunday, or excuse me, moves down a lot, I'll take the position there. But with this idea on Bitcoin, if you want to share my screen really quick, I can show you. It looks really similar to the US 500, S&P 500 trade. So what I was trying to, really take advantage of again is just breaks of structure. I'm looking and I'm seeing here, this was our bottom at about 35, 36,000 held. We're now broken under that. This tight coiling here since mid-May is really what gets me interested to see this make a big move in either direction. But now having broken above the 21 and then returned under the 21 EMA twice recently, holding that 8 EMA under the 21 with that very bearish market sentiment under the 50 value down at 36. I think that we could probably see this move lower from here. How low? I mean, yeah, of course, we can see this pin right here at 25, and that would be like the ideal target. But I think it can go lower than 25 too. I think that if you look at a higher time frame on this thing, just where we're sitting, again, not here to forecast, but this is making lower highs and lower lows. Sentiment is turning bearish, and no one's talking about how much they love Bitcoin, except the people that have been talking about them loving Bitcoin since it was, 2009. So everyone right now, yes, exactly. So only the people that have read the Bitcoin Standard are talking about Bitcoin. Everybody else is like, "What? Who cares? It lost half its value." Yeah, it's a scam. I was right. You know what I mean? That's what most people are saying right
Peter Schiff is a very happy guy right now.
Yes, he is.
Exactly. So yeah, I'm short Bitcoin, and I'll manage this trade as we go into the rest of the week.
You should have no issues monitoring that over the weekend too, Austin. Cool. I mean, it's open 24/7. I think crypto's 8-cap handles that as well. Nick, anything for you for now over the weekend? Is it a crypto that you can watch and monitor, or is something else? What do you like?
Yeah, I just took CAD Swiss, and this is a trade that I actually took just prior to going up on the stream with you guys here. I took this on my personal account, but I just added it into my 8-cap here, and taking a look here. CAD Swiss, going off of what I just talked about prior, oil is sort of the basis. If you think about it, right, from just a perspective of why for the new people out there, the correlation between Canada and oil. Canada has a lot of oil. They sell a lot of oil. If the price of oil goes up, then the Canadian dollar gets sent more money. Right. So if they're exporting majorly the oil that they're getting from their massive reservoir of resources up there, then they could generally also see a move up. Now, oil, I mentioned earlier, just looking at the price chart here, we targeted or talked about that previous high, 128.5. And based on what we were talking about earlier, I think there's a good shot we make a move up there. Now, it might not be in the confines of this trading battle, but just because I am, actually taking this trade, I figured I'll go with what I'm actually placing, and just maybe we'll be surprised. Maybe we'll run up here. So I did take CAD Swiss on the long side there, and looking for more upside, especially where we're currently sitting. I kind of like this setup in terms of, take a look at it like on the two-hour chart here. I put a stop just below structure here. So if price breaks out here, just the nature of my trading, if this level doesn't hold, then I'll stop out here. If price comes down to here, then I'd be willing to take a second attempt. So that's genuinely what I will be doing this week on my own positions, even outside of this trading battle. So I might as well stack a trade on here as well.
It makes it
ideas
easy, right?
Of target there and there. Sorry, nice. Say that again?
No, I said it makes it easy to remember, right?
Yeah, it's easy. It's right off the top of my head.
Got some real skin in the game.
Exactly.
All right. So let's do a little recap. So Austin, we have you short the S&P 500. Nick, we have you long the dollar yen. Austin, you're holding a Bitcoin short through the weekend, and Nick, you're holding a long CAD Swiss for a little bit of a retest that possibly you could close tomorrow, right? If you see a little pop to the upside, be out of that tomorrow.
Sure. For the nature of the battle, yeah.
Sure. Okay. So if we have the scoreboard running, I would like to see if that's pulling the trades in, since we have 4 trades for this battle. Fellas, any final thoughts? I know we got kind of down a little rabbit hole of talking big picture. Maybe we're all inspired by Ray Dalio, since he's everywhere and he's promoting the heck out of his principles book. But I will say this, for a guy that runs one of the most successful hedge funds in the world, it's nice to see that he's giving back, because there's not a lot of people, I don't see Warren Buffett giving back like this, where, what's Warren Buffett? Simplest, easy stuff, like just buy and hold forever. Value investing, him and Charlie Munger, They don't tell anybody anything. You know, they just do their thing in Omaha. So, all right, we got the scoreboard up. And dollar yen, look at that. We're up some profit there, looking good. Austin, you're pretty much break even, but yeah, dollar yen, nice little pop. I like it. All right.
Nick's getting that Asian market pop.
That's right.
Yeah.
And so Nick, everything's looking good for ECPAT USA. And Austin, we'll see. Look, we'd like to see both you guys end up being winners, International Rescue Committee and ECPAT USA. Also, considering both of you are 1-1 in your trading battles, I'm anxious to see who gets the upper hand to go 2-1 and start chiming in on that winning record. So I know this will not be the last time. You guys will definitely be on the trading battle once again. I'd like to thank our host and sponsor, powered by 8cap, for the trading battles. The team does a fantastic job. Everyone out there follow 8cap, follow Trading Battle. This content is fantastic. We bring together great traders all over the world. And most of us here, real traders, full-time traders, and here to help you. So make sure you check out Nick. Make sure you check out Austin. Follow them on social media. Get involved. Ask some questions. Reach out. And gentlemen, any final parting thoughts before we go?
No, I really enjoyed it. Chris, it was good meeting you. Nick, always a pleasure to see you. And good luck either way. I'm glad to be here. I'm glad to do it for charity, and hopefully be back again soon.
Yeah, absolutely. And just to reiterate that, good to see you too, Austin. Always good. We've actually, Austin and we've known each other for a long time now. Yeah, we've done collabs in the past. We've done live streams together, so nice. It's been awesome. So it's good to be back on here, and now for a good cause. So may the best man win, and hopefully we can win some money for charity.
Definitely,
absolutely. All right, thanks a lot, guys. Everybody watching, thank you so much. We'll see you in the next trading battle. This is Event Card 65 on behalf of the Trading Battle team and 8cap. This is Chris Pulver. Take care. Over and out. Bye.